we're going to dive straight in this week and look at the DXY. So the DXY, you have it pulled up here on the screen already. The DXY is the US dollar index that will track basically the strength of the US dollars in the world economy. So what you're seeing on a chart of that index is as the DXY increases, the value of dollars effectively, like the buying power of dollars, increases. And so generally speaking, as the DXY trends upwards, stock equity assets and crypto markets tend to sell off as dollars are gaining strength and investors are migrating their asset holdings from more speculative investment vehicles into cash, which is gaining in assuming cash is gaining in the DXY strengths. So we have the DXY pulled up right now, and you can see it is starting to kind of lose support here, and it looks like we're getting a bit of a Wyckoff play out here. So the Wyckoff distribution that you have pulled up there on the right side is basically the technical analysis pattern that we're looking for to play out here. And if that does play out, then that is very much in line with what we were talking about last week, where the markets are starting to turn much more bullish. The markets being, cryptocurrency markets and the equity markets. So like the SPY and the QQQ. So like the NASDAQ, the stock market, the New York Stock Exchange, and all those assets, we're looking very bullish. And then this week we're looking now at the DXY, which is starting to look a little bearish. So this distribution you can see on the right it ends with a market down action. And so if we can continue to play this out and see that bearish pattern play out, that actually bodes very well for our equity positions and our crypto positions. So this is in line with what we're kind of expecting from last week. But now, getting that same kind of sentiment from the dollar index chart versus from the actual stock market index charts.
Yeah. So, I mean, even if the DXY doesn't start the extreme markdown phase, but even if it drops here and it seems like it could just be like ranging, then even if we don't get the markdown range, then this whole zone is just, it's just been bouncing around in this range for since 2023. Yeah. But even that would be good for risk on assets like stocks and crypto. Like both are just considered risk assets.
Yeah, exactly.
But if we do get something like distribution here, and then we get an aggressive sell-off, then we're going to see both those the stock and crypto markets pump a lot.
Yeah.
So I mean so for the week,
the current candle looks pretty bearish there.
Yeah, it looks pretty bearish
yet. So let's not make too many decisions off of an open weekly candle. But the previous weekly close was definitely like a little bit of a doge there, and a little bit of a doji. And but right below the strength band too, I would consider that a bearish indication as well.
Yeah, totally. And the stock RSI is
it's got plenty of room to move down still.
It's got a lot of room.
I wouldn't call that oversold by any stretch of the imagination. No. So
and also the monthly just closed, and that seems like a double top. A little
it's making a lower
McDonald's
high there.
golden arch.
It also looks like a bit of you're seeing a little bit there in that chart, a little bit lower highs and then lower lows too. If you want to see, and that's generally downtrend. So while it's still on the green side there, it does look like we're getting to a point where we may be losing that support, which obviously then if our Wyckoff plays out on the weekly, that absolutely will, see our monthly chart start to dip below our strength band as well, which all of that is great for our risk assets.
Exactly.
So that's fun.